From the morning reading, SPX rally on oil rises. 6 of 9 sectors moved higher on Thursday. XLE, XLY, and XLB were the strongest sectors, while XLF was the weakest sector. Oil rose $1.52 to close at 29.85. Breadth strengthened as advancers led decliners 1.87 to 1 on the New York Stock Exchange and 1.15 to 1 on the NASDAQ. Traders don't want to be holding the bag over the weekend. Like we saw last August, there has been a pattern of risk aversion heading into the weekend, as the S&P 500 hasn't closed in positive territory on a Friday since early December. Over the past year, a majority of Fridays have been negative, something we haven't seen since 2007. Going back to 1953, though, it was a mixed indicator of risk aversion. Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 5:49 a.m. Central Time, and I am recording this in preparation for the market day of January the 22nd, 2016. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, once again, a big night in the futures markets. Let's go ahead and get to the morning report. And indeed, in all 4 of the U.S. indices, it's up sharply, with the S&P futures up over 25 points for a net change of some 1.37%. Russell, even stronger, 1.5%. NASDAQ, even stronger than that, 1.67%. And the weakest, the Dow, up 1.24%, but still very healthy. Crude oil up over 5% in the overnight, 5.25% or $1.55. Euro down almost over a third of a percent. And then let's see, bonds down over 0.5%, and gold at scratch. Overseas action was up sharply. China up 1.25%, Hong Kong up almost 3%, Japan up almost 6%. That is an amazing move there. Germany up 1.88%, United Kingdom up 2.19%. In terms of macroeconomic reports for the United States today, relatively light, but there is some. We have existing home sales that come out during the market open, so be sure to be aware of that. In terms of current volatility conditions, yesterday was a bit of a spinning top in most of the markets. So short-term VIX just poked underneath 30. Skew remains quite elevated. IV percentiles really kind of middle of the pack for the year, though elevated compared to several weeks ago. 52 in the S&P, 58 on the Russell, 57 on the NASDAQ, and 59 on the Dow. In terms of standard deviation moves on a close-to-close basis yesterday, there were none in any of the U.S. indices. Relatively quiet, actually, for the last 3 days in terms of standard deviation moves close-to-close after a period of significant volatility, including multiple 2 standard deviation moves. In terms of, let's go to the charts. I'm using the S&P futures again because it's so much overnight action. And we see here the most recent action. We had the big wick with the potential capitulation bottom, then something of a spinning top, and then this overnight coming into this morning, big up. I don't see anything that's going to likely, from the macroeconomic reports, turn this around before the cash open. So it would seem that we will open with a very strong open. The big question, of course, is this just a relief bounce after having almost a kind of waterfall cascade down action coming down, a significant number of points, really from 2073 all the way down to, call it 1800, about 170 points, very large fall. is this just a little bit of a bounce? And as a percentage, this is still very, very small. Do we actually get to where we take out at least this swing high? And until you take out that swing high right there, you really don't know anything about whether we have changed this short or even intermediate term trend into something other than flat out bearish. Right now, everything is bearish. If this were to close today, and this would go against the pattern we mentioned in the morning reading, how people have been risk averse with Fridays of late, and not seeing very many up days on a Friday. This would seem to be certainly setting up to go the other way, though we've seen some big wicks in some of this most recent action. This is not done yet. In terms of the potential, though, we could have a close outside of this diagonal resistance area, and a pretty convincing close. So if we get a big wick, reversal bottom, a spinning top, and then a confirmation coming out of that, especially on a Friday, you'd have to say that at least for the short term, this has turned. Those are a couple different ifs in that statement, but so far this is setting up for something of a bounce. In terms of the Dow, same pattern. NASDAQ, same pattern. Russell, nowhere near as robust. Take a look at volatility. Definitely coming down, though still very elevated. We're still up over a 20. And bonds that coming down as you would expect. So everything seems to be lining up for a bit of at least a short-term bounce. Now, I did hear some fascinating analysis of the markets yesterday, taking a look at financials. And one of the things about this was that with the financials, they were questioning whether this is really a change in at least the short-term trend, that this bounce really mattered. And if you take a look, not just financials, but also some of the key players in the financials, the biggest banks and Goldman Sachs and stuff like that, were not doing well yesterday. And without participation of the financials, without participation of transportation, and the bounces that we have here, I mean, this is nowhere near the kind of relative bounce that we have seen in the S&P, for example. It's hard to believe that we'll really get much more than just a bearish bounce, I should say a bullish bounce in a bear market, and then just roll over in a bear flag. Now, obviously, the thing that's been driving the market down has been crude oil, and for that matter, the commodity complex. And this is a humongous overnight move on crude, so we have to respect that. This has got to be a major part of why this market is going up so much today. And not just us, but the overseas markets, as you saw from the morning report. And let's see here. Let's try this one. I was looking for the commodity complex. The DBC, this is an ETF for the commodity complex. This isn't it's like a decades low. I mean, this is, and DBC doesn't go back 20 years or anything like that. But if you look at CRB, which is probably the best way to look at this, but anyhow, we're on DBC. This is just absolutely cratered, and every single bit of a bounce has just been met with selling. We had a bit of a nice bounce here coming in the off the August bottom, but you see after making just a tickle above that swing high, it's just been falling ever since, and every bounce has just been met with another significant wave of bearishness. And until we actually break this pattern, and really, you'd have to come all the way up here on this chart, which is like a 10% move. You'd have to come all the way up here before you'd even break the intermediate pattern to say that you have a higher high. So there's a lot of technical damage here, and until proven otherwise, I would suggest remaining defensive and probably kind of keep a bearish posture as top of mind. They'll be prepared that we might be forming at least a short-term relief bounce in the S&Ps, and we'll finish with that chart right here. So this would seem to be a legitimate bounce. Our only question is, does it become something more than just a short-term relief bounce? We don't know that yet. So let's go back to our daily report. Everything on the mechanical big picture here is still very ugly. Phase 5, the break of horizontal diagonal support. Now that will change if we get a close today, breaking that diagonal resistance line. So kind of keep that in mind. IBD status, market and correction, accumulation, distribution remains an E on both the S&P and the NASDAQ. So very, very poor breath. GMI index retains at 0 out of 6, still a sell signal. Stock charts decision points, still a sea of red and at best neutral with only one lone green signal. The consensus of all this is decidedly bearish, and at this point, we're not even calling this a market in transition anymore with the recent breakdowns. This is bearish, pure and simple, with something of a short-term bounce would seem to be coming into play, and we'll have to wait and see if that actually becomes something more. In the intermediate term, severely bearish with the bearish sentiment line. So just that, we expect the bearish moves to be more pronounced and deeper and longer, with the bullish moves to be just that, relief and setting up for the next bear flag until proven otherwise. Position sizing opinion still remains at 0 and less than 50%. I mentioned that intermediate term market posture severely bearish, and still, even with the action of the last 3 trading sessions, including last night, this is still all severely bearish, still all under 20, and not even exited above the 20 line yet. Hedge warning status remains level 3, though if we get a confirmation coming out of this pattern, we might look at going to 2 plus, but as it stands right now, we're still waiting for confirmation of a bottom. We have not yet gotten that yet. In terms of specifics, still a sea of red here. Market in decline, sharp increase warning. VIX futures up over 18. Distribution day count still in market and correction status. We still have VIX phase has been increasing, though that could start to turn. Still have an elevated skew. The current week out still very, very elevated. We still have all 5 of the key intermarket risk aversion indicators flagging as risk off. Our fear and greed index still in the extreme fear area, though somewhat improved over yesterday. In terms of special opinions, no changes here. All 3 systems, option income strategies, covered call, and put selling, all calling for our systems to be outside the acceptable windows to initiate new positions for novice traders. Aggressive traders might want to start nibbling, perhaps selling out of the money puts on those watch list charts that you've been eyeing as wanting to get into. You might also, in terms of covered calls, consider selling out of the money puts, perhaps legging into covered calls. So you might want to start getting some toes in the water as aggressive traders, but this would be very early and still relatively speculative to be able to start to initiate positions at this point. We have not even confirmed this bounce yet. So just kind of keep that in mind. You're just dipping the toe in the water for the aggressive traders. Novice traders, stand aside, wait for confirmation, wait for our intermediate term market posture to at least cross the 20 line and turn bullish. Wait for that IBD status to turn to confirmed uptrend. Okay. I think that's probably enough of that today. We had a long couple sessions the last couple days, so we'll kind of move along here today. One thing I wanted to mention is that you can get alerts if you sign up to my email And you can do this one of two different ways. You can either go to this address right here and just roll down that screen just a little bit. You'll see this button, join our mailing list and receive the free portfolio strategy ebook. Just click on that, fill in your name and email address, and then you'll also receive, as a result of that, a hyperlink to get to my ebook portfolio strategy. I send a very limited number of emails, probably less on average than one a week, but I do send out alerts when the hedge risk level changes, and then various periodic blog articles and items of interest. So I definitely will not pound you with a ton of materials, but you might want to go ahead and get on that sign up list. If you're a smartphone fan, you can send Falcon Global, all one word, no spaces here. Text that to this number, and that will also get you into our mailing list. So two easy ways to get into the mailing list, and I think you'll find that is productive to your trading. Also productive to your trading, I would suggest, is subscribing to the YouTube channel. And if you'll do that, you'll get notice when I post new content, such as this morning market preview, to the YouTube channel. So just go to this address right here. If you are in YouTube and you put Falcon Global LLC, you will find me. I'm the traders one. And you'll see these videos that I post each market day. You can also, on the YouTube, I'll mention that there's that little gear that you can access the settings, and you can change your playback to high definition. And if you've not been doing that, once you receive notice that the content is up, give it a couple minutes to fully load, to be ready for high definition, but then you can watch it in high definition, which makes things much simpler to see and understand when you get into some of these charts. And I know I have some pretty busy charts sometimes, so that high definition can be helpful. The other thing is that you can speed up the playback, and you could turn, for example, a 20-minute video into about 13 minutes by speeding up that playback speed about 1.5. And for most of you, I think you'll find that 1.5 is still quite understandable, and you're able to follow, what's being said, and yet at the same time, you can kind of knock it out and get the information that you're looking for in less time than what was recorded at. So a couple things, a couple tips there to keep in mind for today. That's probably enough of that stuff for today. I'll just scroll through the rest of these, and if you have an interest, just hit the pause button, go to the hyperlink, and get the information. Disclaimers as always, hit the pause button if you need more time to review, and you can see the hyperlink down here for the full disclosures if you need to dig deeper. Thank you, and I hope you have a great trading day today. Looks like we're going to have a good positive close and break the Friday curse of late. So we'll see you back here on Monday morning with the Falcon Global Market Preview. Good trading.